In this video, we're going to talk about using stop and limit orders. If you're brand new to trading, stay tuned for this one. Hey traders, a very warm welcome to you. Okay, so if you're brand new to trading, first of all, welcome to the channel. If this is the first video you've come across, consider subscribing for more videos from me and other traders. I think you'll find it beneficial to your trading journey. Okay, back to the topic. We're talking about stop and limit orders. What are they? I know when you're a trader, new trader, you can get confused if you're already thinking about long, you're short. You know, what are people saying? What do they mean? And then you see on your platform the different order types. You think, well, how do I use these? What are they for? Sometimes it's obvious, and we'll go through some obvious ones, but sometimes they're not so obvious. So here's just 4 different ways, in fact 8 different ways you'll see in a minute how we can use these individual orders. So a limit sell order. How would we use a limit sell order? Let's say, for example, we are in a long trade. In other words, we bought and we're expecting the market to go higher. It could be long in a spread bet, CFD, futures contract, stock, whatever it may be. The market's plodding higher. We're very, very happy with it. We think, yep, that's great. We think, you know what? I've been in the trade for a while now. I wouldn't mind taking my profits $100. So what choice have you got? You either sit in front of the screen and wait until the $100 is hit, close your position. You could set an alert with your charting platform that sends you an alert and you run back to your screen and you cover it. Or you could say, you know what? I'm going to use a limit order, a limit sell order. And that limit sell order will be set to the quantity of the trade that you've got. And it will basically say, when the price hits $100, take me out of the trade, please. Take my profits, get rid of my trade, bank what I have. And so it's taking profits on a successful long trade. If we flip that on its head and we were short, in other words, looking for the market to go lower, we're short £10 a point, £5 a point, £1 a point, 2 contracts, whatever it may be. In other words, the price is pushing lower. We're doing very, very well. Incremental profits coming nicely. However, we think this thing might have fallen as far as it's going to do in this week or this month, whatever our time period is. And so we might say, you know what, $60 is our level that we want to take profits at. So we'd use a limit order. We use a limit buy order because we're covering our short, and to cover our short, we have to buy those shares back. We have to buy to cover to get our position back to zero at $60. As soon as that price hits $60, we're out of the position. We've banked the profit. These are 2 ways of us banking profits or taking profits on successful trades. Okay, how else could we use these 2 limit orders? Well, we can use a limit order to actually get into a position. We just talked about getting out of position, in other words, grabbing that profit that we had. But what about if we want to get into a position? We have no position at the moment in this instrument, in this market, whatever it may, stock, currency pair, doesn't matter. No position, completely flat, but we want to take a position at a certain level. So this example, let's say we think this market would be a good short entry if we hit $100. For whatever reason, done our analysis on it, that's what we believe. The market pushes up, hits $100, we want to get short. Again, we're going to set the screens, we're going to set alerts, or we can put in a limit sell order. It's exactly the same order we had, but because our position at the beginning is 0 in this instance, it's going to make us net short. Rather than covering our long, closing our long, should I say, it's going to make us net short. So we'll be net short at $100, whatever position size we get into it. So getting into a trade. Flip it on its head. We think that this market here is a great buy at $60. We don't have a position already. Comes down, we put a limit buy order in, exactly the same thing that we were doing to cover our short position. But this time we want to get into the position. $60, put our order size in, leave it. As soon as that price hits that $60 level, we are getting long. We're now in a trade and we are long. Okay, so we can see how we can get into a trade by using limits, how we can get into a trade using limit buy, limit sell. Now, one extra kind of advanced thing that we could do, let's say we were short here and we wanted to cover and we wanted to be clever and reverse. So we wanted to go cover the short and go long. We could use one order, but for twice the size. So let's say we were short £10 a point with a spread bet kind of analogy. We would put a limit buy order in for £20 a point. So that would, not only would it cover our £10 a point short, but it would get us long £10 a point at that $60 level. Obviously that's a bit more advanced technique, but you can see how we can adjust these tickets to suit. Let's move over to stops. Now, stops, otherwise known as stop loss orders, are really the same kind of thing, but they work in reverse. Let me explain. So we have a scenario now, same scenario, prices going up higher, but this time we're short on it. Instead of being long, in this scenario, we're making money. we're losing money. Unfortunately, we've called the market wrong this time. The trade is not working very well, and we want to cap our loss. At some point, we want to take the loss, take it on the chin, move on to the next trade. Like any good trader, forget about it, move on. So what do? Again, we either sit at the screen or we can use a stop loss order. In this case, it'd be a stop buy. As we're already short, we need to buy to cover back that position. This time the buy is going to be higher than our short, so we're going to lose money, unfortunately. We're going to cap losses on the short, but it doesn't matter. That's the way it is. We'll put a stop buy order in at $100 and it would cap the losses on that trade. And if the market went even higher, we'd be out of the trade. It doesn't matter. Flip on its head. If we happen to be long and wrong, market's going lower, 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 losing us money at some point, we want to get out of that trade. What do? We have a stop order in, a stop sell order for the quantity that we've got. And again, $60 is the level that we've chosen for this example. Market comes down, tag $60, it will sell the amount of shares or the position size that we want in the market, cap the losses on the long, close the trade, we're just left with a loss. Now, that's example if we wanted to get out of a trade that was losing. What about if we want to get into a trade, but we want to get into a trade only after a certain level? Why might we want to do that? So let's say, for example, we've noticed that the market's been in a range bound scenario, but if it breaks out of a range, we'd like to buy it and get into the position. So we could use a stop buy order to get us into a position that we don't already have. So what that does, if we had a stop buy order at $100 for whatever position size we want, as the price comes and breaks that $100 level, we are then going to be entered into a buy order, which gives us a net long position. Because don't forget, in that example, we don't have a position already, which we're looking to get in if a level is breached. So that will give us net long position. So it's getting us long when that level breaks. Flip on its head, we're going down. We want to get short again if a level breaks. Could be anything, could be support level, could be a multi-year low. We think we want to see that breach before we get short on it. Whatever it may be, same thing. No position comes down. Stop sell order goes into our broker. As that $60 level is breached in this case, we then have a sell order triggered and we become net short in that market. So we went from no position to a short position by using this stop sell order. So again, maybe we can go advanced on this and we could say, hey, perhaps we are already long, we want to cap our losses, and not only want to cap our losses, but we now want to flip to short. You could see how you could do that. You could double up your position size, take your stop loss, take your long position off, and then get yourself net short by increasing the position size of the ticket. So very flexible. You can probably already see how you can combine a few of these together, have a limit order in, a stop order in, or a stop and a limit, or a stop, then a limit, then another stop. There's plenty of ways of combining these orders to get exactly what you want and the exposure you want to the market when you want it. But there's just a basic overview, guys, of stop and limit orders. Okay, hope you enjoyed the video. Thumbs up if you did, and if you haven't subscribed yet, please consider doing so somewhere around here for more videos from me and other traders on this channel. Take care, good trading. I'll see you in the next one. Goodbye.